Underwriting is a crucial component of the mortgage process that dictates whether or not you'll get final loan approval. Hi, this is Lori Richmond with Westcorp Mortgage Group, and in this video, I'm going to share what happens when your home loan is underwritten. Okay, let's dive in and learn more about underwriting and how it works. So, what is underwriting? Underwriting is the process by which your lender verifies your income, assets, debt, and property details in order to issue final approval on your loan application. Underwriting happens behind the scenes. Your lender might ask for additional documents and answers such as where bank deposits came from or ask you to provide proof of additional assets. So what does an underwriter do? A mortgage underwriter takes a look at your finances and assesses how much of a risk a lender will take on if they decide to give you a loan. The underwriter helps the mortgage lender decide whether or not you'll get approval on your loan. The underwriter will ensure that you don't close on a mortgage that you can't afford. And if you don't qualify, the mortgage underwriter can deny your loan. So how long does underwriting take? Your mortgage can be just as unique as your financial situation, so the exact amount of time underwriting takes will vary on a case-by-case basis. The sooner you get all of your necessary documentation to your loan originator, the sooner your loan can be underwritten. So it's important to get all your requested documentation to the lender in a timely manner. Okay, now what makes up the mortgage underwriting process? The underwriter evaluates your finances and past credit decisions. During the underwriting process, your underwriter looks at 4 key areas that can give them a more complete picture of you. The first thing they're going to look at is your income. The underwriter needs to know that you have enough income to cover your mortgage payments every month. To prove this, you're going to provide 3 types of documentations to verify your income. W-2s from the last 2 years, your 2 most recent bank statements, and your 2 most recent pay stubs. Are you self-employed or do you own a sizable share in a business? You'll need to furnish a few different documents in lieu of W-2s. Things like profit and loss sheets, K-1s, balance sheets, and your personal and business tax returns. Your underwriter will also check that your income matches the income you report and verify your employment situation with your employer. The second thing is the appraisal. Appraisals are almost always required when you purchase a home. They provide protection for both you and your lender because they ensure that you only borrow what the home is actually worth. An appraiser is going to inspect the property and walk through the home to take pictures and measurements in order to evaluate the condition and features of the home. The appraiser compares similar properties by looking for homes that are similar in location, size, and features. These comps need to have sold within the past 6 months and be within a mile of the property unless you live in a rural area. The third thing the underwriter is going to look at is your credit. An underwriter evaluates your credit score. Your credit score shows the underwriter how responsible you are when you pay back debt. A good credit score shows that you pay back your debt on time and can also help you qualify for a lower interest rate. The minimum credit score you'll need to have depends on what type of loan you're applying for. The underwriter looks at your income, what you owe, and what you want to borrow to determine your debt-to-income ratio, or DTI. Your DTI is the total amount of money you spend on bills and expenses each month divided by your monthly gross, that's pre-tax income. Now, lenders prefer to see a DTI ratio at or below 50%. And the fourth thing that the underwriter looks at is your asset information. Your assets can help you get a mortgage approval because they can be sold for cash if you default on a payment. An underwriter might view your checking and savings accounts, your real estate, stocks, and personal property. Bottom line, underwriting simply means that your lender verifies your income, assets, debt, and property details in order to issue final approval for your loan. An underwriter is a financial expert who takes a look at your finances and assesses how much risk a lender will take on if they decide to give you a loan. Throughout the underwriting process, it's a good idea to actively respond to your lender's request. Don't apply for any new credit lines during underwriting and respond to inquiries as quickly as possible. Be upfront and honest about your finances, or this could cause delays in the loan application process. And of course, we're here to help you along the way. This is Lori Richmond with Westcorp Mortgage Group. If there's anything we can do to answer your questions about what happens in underwriting, please give us a call. You can find more videos about the home buying process on my YouTube channel.